August historically is the market basically is on hiatus due to European holidays, and the last 2.5 weeks, foreign exchange has had very little actually to do. We have suffered from lack of liquidity and direction, and market participants have been winged to the sidelines, looking for stronger guidance on the future. And the next couple of weeks, specifically in September, will give us certainly a very good indicator of where foreign exchange markets will be going for the final half of the year. What we've seen over the last little while, markets have been subjected to intense speculation on what the Fed is about to do, or if the Fed is actually going to do anything. Will they be reining in their $85 billion a month bond buying program? This week we get FOMC minutes from the July meeting from the Fed, and the minutes basically have the potential to generate more volatility in the market spot. Many market participants are obviously expecting them to clarify where the Fed officials stand on the subject of tapering as of the end of last month. It is assumed that most policymakers expect to taper QE3 purchases as soon as September, and there's a growing feeling that the September move is still currently on the cards, despite some of the data that we have seen both out of North America and out of Europe itself. However, it's probably less of a done deal than, say, a month ago. People are looking more and more at non-farm payrolls, as this seems to be the largest and strongest variable that the Fed is playing with. And prior to the summer doldrums, let's say, prior to September, there was a rush to buy dollars, but that's certainly been fairly much put on hold due to the lack of liquidity and market participation currently in the marketplace. The market will wait to see what the Fed has to say this coming Wednesday, and that should have a huge effect on the general direction of the US dollar over the next quarter. Well, that's an interesting question. It's based on a few factors. First of all, there is a general lack of liquidity in the marketplace. And secondly, the market for quite some time has been trying to position itself and unwinding some unfavorable trades ahead of the Fed and potential tapering in September. As early as 6 weeks ago, the market was more convinced that its tapering was very much on the table for September. But now it's not a done deal, and people are certainly protecting themselves to a certain extent and have unwound some of the longer dollar positions, which in effect has supported the euro and obviously the yen by default. What we've seen also that global bourses have certainly been put under pressure because of the positioning and liquidation of U.S. assets right across the spectrum. And liquidation of the U.S. assets has, by default, supported the euro to a certain extent. What we saw this morning, even hawkish comments from the BUBA on the growth in Germany will return to normal in the second half of this year. One would have expected the euro to certainly get a leg up on this, a stronger leg up on this, but the lack of market participants is also not helping the euro, and even the hawkish comments from the BUBA, we're certainly starting to see a somewhat of a cap or a cap for the euro at current levels, and there's certainly strong interest from Asian sellers to want to offload some of their European positions on euro rallies at the moment. Well, it's all basically, currently the coalition, we have Chancellor Merkel. At the moment, it hasn't been very much on the global spotlight. One would have expected it to be more so, but as we draw closer to the election itself in September the 18th, it will become more of a global issue. Obviously, what Chancellor Merkel has been doing, she really hasn't differentiated herself from her opposition parties. And at the moment, there's very little difference for global markets to be rather interested in what's going to occur. Most people assume that the coalition will be issuing come September, and Merkel will again be at the helm. But like anything, once market events become closer to their existence, then the market will actually take more of an interest. But at the moment, first and foremost is the Fed and their thoughts on tapering, and whether they will reduce their 85 billion bond buying program monthly. And if this does occur, then we will have a stronger positioning with regards to the US dollar and global interest rates, which will be driven by the US yield curve. And in effect, the euro itself will be in the underperformance category, along with most of the other majors trading against the US dollar. That is assuming that tapering does occur in September, of course. But if it does not, then the market will obviously start looking towards other economic events and global events. And obviously the next ones will be the Australian election down under, and obviously the German election in September.